Hi, this is Mark with a brief update for the 8th of February. I said on Sunday that my way to play the markets this week would be to look for bounce trades, and I went into detail. I explained, if you're not sure then look back on Sunday's video. But what I was showing you was on the euro how price was bouncing between this upper level here and a lower level down here. And I also suggested that the difficulty with this area and all euro things was that we were getting spikes. So the more conservative entry was down here at 30.40, and spookily it worked almost to the pip. Now the way to play this kind of trade is it is a percentage game. So what would happen is if price had come down here and you'd taken a trade here and you put your stop below here at 45 pips and it's lost, and it's got taken out, okay, you've lost one, that's 45 pips. Next one, you take this trade, you only needed a 20 pip stop as I told you on Sunday, and what's happened? If you've taken this trade, well, potentially you're now 200 pips, but getting out at the suggested level up here, that was 166. So you've lost 50, you've won 166. Now I actually took the Swissy. I don't trade the Swissy that often, but as I said on Sunday, the spikes on the euro were concerning me on all euro pairs. But you could have taken either the euro or the Swissy, and the good thing is for confirmation, this candle here was the 8 AM candle on Monday morning, and at the very same time, so you had this double candle pattern here. You got the candlestick pattern, you're outside the Bollinger Band, you've got the 200 EMA underneath, and recent support and resistance. So lots of reasons to take the trade. On the Swissy, the exact same time, we had the exact same candle formation, and we're outside the Bollinger Band, and we had here a daily 55 EMA. So with this particular one, I preferred this one because I only needed my stop just above this recent high and above this daily 55 EMA. You could, on the other hand, have been more conservative and you could have gone up all the way up here at 50 pips. And why would you be interested in 50 pips? Well, because the target down here was 140, and therefore we're in for an almost 1-to-3 risk-reward ratio. And what did it do? Well, spookily, it did it almost, well, to the pip of the weekly 55 EMA again. You take the trade again here now, and at this moment in time, you'd be 20 odd pips in front. This is the euro pound. And we were talking in terms of euro pound. Bounces up 8300, and I said again the difficulty was the spikes on the euro, but what's it done? It's come back up last night and it's touched to the pip the upper trend line. This trend line is obviously moving down as we speak. We've got the added confirmation of the 200 EMA. I only ever think got about 15 pips in profit with this, and it may get taken out, but that was the logical area. We spoke about it on Sunday. And the reason why it's a good trade is potentially because you've got a small stop, and once again we are expecting price to get all the way down here. Now there is a difficulty now. Today the Greek crisis rumbles on. It's now a high stakes poker that there are prominent people in Europe saying, well, okay, if the Greeks can't make their mind up, then they can go. And some of the Greek politicians are saying, okay, well, if you carry on the way we are, we'll default. So I say it's high stakes poker. At some point today, or tomorrow at the latest, you would expect, with the meeting of the ECB after their rate announcement, there's likely to be fireworks. So be very, very, very careful with all things euro. The CAD was another one that did the bounce. I said to you on Sunday that there were two potential entries with the CAD. The first one was at 99.90, and we got that yesterday to the pip. And I also explained how I split the trade in half. But I showed you how this 55 EMA has been in control on this pair going back to, I think it was October time. And what did it do? It came up again. It touched the area that we wanted. I only took half of the trade, as explained in Sunday's write-up, because I had a feeling it might pull back further. But once again, bounces off an area, multiple reasons to take the trade. Finally, the pound. Pound, as I said to you on Sunday, I was less sure of this one. We did get the breakout yesterday. We would now, standard method, be looking for a pullback to 58.50 with a view to a long. The only thing with the pound again is tomorrow it is interest rate news. More importantly, it's QE news. And the Bank of England is expected to increase the quantitative easing. If it does as they predict, then that may have already been factored in. If they don't, then it could go all over the place. So be ultra careful with that one as well. Hope that helps.